Assalamualaikum warahmatullah and hello everyone. Welcome back to my channel. Today we are going to prepare a statement of cash flow using direct method. We're going to learn the step-by-step approach of how to prepare a statement of cash flow using the direct method. We are going to follow the 6-step color-coded approach. So let us start. So if you look at the question that I have here with me, this is about a company called Cahaya. Cahaya means it's a company that may be dealing with, I'm not sure what is the business, but it is the year end is as at 31st of December 2017. Okay. You are given the draft financial statements of Cahaya as at 31st December 2017 as follows for the statement of profit or loss, right? And you are given the information on sales, cost of sale, the typical item that is normally in the statement of profit or loss, and at the end you have the profit for the year. And the profit for the year is the also called net profit after tax, right? So you can see that there are all the wages, salaries, operating profit, income, expenses, yeah, and all the interest together with the taxation. At the bottom of that statement, you have a statement of financial position with 2 years given, where the first one is where you can see that one is on 2000x6, where this 2000x6 is 31st of December in our prior year, 31st of December 2000x6, which means this is 1st of January 2000x7 if you talk about the current year. So the current year is 2000x7 and the year end of the company is the calendar year. So 31st of December 2000x7. So you're given the question there, assets, liabilities, and with all the details there. You also have the equities and the liabilities as well, right? But there are no segregation between non-current and current liabilities. This one is just a summarized statement of financial position or a balance sheet, and so does the asset section. You do not have the classification of non-current and current asset, so that's fine anyway. At the bottom, you are having the additional information. It's typical to have additional information. Sometimes you are given notes to the financial statement. Sometimes you are given other data as well. But for this question, it's a simple one. So you're just given an additional information, just 5 of them. And look at the requirement here. When you look at the requirement, it is asking you to prepare a statement of cash flow for Cahaya, which is the name of this company. And it is for the year ended 31st of December 2007 using the direct method. And that should be in compliance with IAS 7. IAS 7 is the international standard, but in Malaysia, we are calling it as MFRS 107, where MFRS stands for Malaysian Financial Reporting Standards 107 is our coding, but somehow it is word for word the same as IAS 7. Okay. Let's look at what should we do first. After we have looked at the question, you know its requirement is to prepare the statement of cash flow, using direct method. So let's look at the step. So this is step 1. As usual, everything starts with step. So step 1 is that you are going to prepare the statement of cash flow template. So when you prepare the template, you should prepare the correct template. What do I mean by correct template? So you should first start with having the title. So I've already prepared in advance for you. So the title of this statement is, put the name of the company, Cahaya Berhad. Berhad is limited in English. Statement of cash flows for the year ended 31st of December 2007. And because this statement of cash flow is divided into 4 sections, so the first part is you can have of course the currency in Malaysia. The currency is Ringgit Malaysia, RM. And this one is going to show you the first activities of the cash flow, which is the cash flows from operating activities. And then you should know that at the end, you should be getting some net cash flow from operating activities. And we're going to see what should we include here. But this is the first section. The second section is to prepare or to show the cash flows from investing activities. And later you can just put a few lines gap there and you put the net cash flows from investing activities. We're going to see if it's a cash flow going to be a cash inflow or is it going to be a cash outflow. Then we have the next section, which is the third section of the cash flow, where we have the financing activities. Then you'll be having the total from that financing activities, which is net cash flow from financing activities, right? And you're going to have the first thing, which is very important here, which is going to look at the net increase or net decrease in cash and cash equivalent. So at the moment, you are not sure whether it is a decrease or an increase. We're just going to have this deleted first. Then we're going to insert the details there. Either it is an increase or a decrease. The next one is the cash and cash equivalent at the beginning of the year and cash equivalent at the end of the year, at the beginning of the year. So just add up there. Okay. After you have done that, what is your next step? Okay, first step is to do that. You have done that. So now we go to the second step. Second step is that you're going to label correctly the opening balance and the closing balances given in the statement of financial position, which is the one here, or is also called balance sheet. And later you're going to determine the changes in this cash and cash equivalent. So cash and cash equivalent is the first thing that you need to determine to give you some confidence of how to prepare a cash flow. So we're going to calculate that. But before we calculate that, we're going to do some kind of determination, which one is the opening, which one is the closing balance. Okay. Then we're going to find out what is the net changes first. Okay, let's do that. So let's just determine what are the opening and which one is the closing balance. So the opening balance of the cash flow, right? The opening balance is, if you can see here, 2000x6, which is last year's or the prior year ending 31st of December 2000x6, and this is the current year, which is year ending 31st of December 2007. So you have two comparative statement of financial position there. So you have already determined this. We can put some different color here maybe. Yeah. Okay. Right. Next, after you have determined that, you need to go and find out what are your cash and cash equivalent. And you need to find out the change in that. So we create one column here for change. Right, so the changes. So let's just go and check what is our cash and cash equivalent. Okay, this is the most typical one, which is your so-called bank balances. So I'm using some green color there as my my way of classifying it. So you're going to find out what are the changes in the balances. So you can see that if you compare the beginning balance with the ending balance, there is an increase from the beginning or the opening to the end of the year, the current year, by 110. So to just take the closing column and deduct with the opening column, and the column next to the closing columns will be your changes column. Next is that to find another cash and cash equivalent. Sometimes you may be given some bank overdraft, some marketable securities which are less than 3 months, or maybe you may be given also some cash balances. But in this question, none. But let's see, you have some item there, short-term investment. Don't just simply think this is a cash and cash equivalent. Let's check if there are some information. Yes, information number 1 says that short-term investment are part of your cash and cash equivalent. So therefore, cash and cash equivalent is not only just the bank account, but it's also the short-term investment. So that was the second step. After you have done the second step, you need to determine the net changes, right? So determine the net changes means you're going to add the one from short-term investment, where you can see that there is a decrease from the beginning balance to the end of the year, a decrease of 3,000. And for the bank balance, there was an increase of 110,000. So this one will have to be your first item that you are going to prepare, which is going to be the cash and cash equivalent schedule. I have this done for you, so you should prepare this cash and cash equivalent schedule. Put the title, cash and cash equivalent, put the opening balance. The opening balance means the one which is 1st of January 2018. Sorry, this is 1st of January 2017 actually. Let's make some correction there. This one is 31st of December 2017. Okay. Then we need to put the two things that you get there. Just copy, paste, and put it here. What is the balance for the bank? The balance for the bank is 160. So it should be 160 here, beginning. Right? The balance for the short-term investment opening balance was 45. So you can see here, right? In this section there, opening section, I'm taking from here. Okay, I'm taking from here. Okay, now just reduce this a little bit. Okay, so you have better view there. Okay. Now, put them, then I total up those two. If you total up this and this, so you have 20 and 5. 205, and go to the closing column, take the bank balance, and then take the short-term investment balance. Make sure you take the correct column, and you have the total. So if you have done the total, now you're going to do the net changes. And you know that the answer to the cash flow statement, the last 3 rows here, is actually from this cash and cash equivalent. So you have more than one, then you can do this. If you just have one item under cash and cash equivalent, you can straight away put those items straight away in the statement. But today, we have 2 cash and cash equivalent items. For the beginning balance, the net changes coming from the 2 item there is you compare 270 with 160. So the changes is 110. Beginning balance. At the end of the year, right, net changes coming from the bank account, is 110. The one coming from the short-term investment is 5,000, a decrease. The one from bank account is an increase. Then you have the net changes, which is an increase, net increase. So that net increase, this one, will have to be put here. So, and sorry, it is here. It will be here. So I'm going to color that green. So there it is. And you're going to insert here is an increase, right? So you're going to insert the word increase here. If there is a decrease, you're going to put the word decrease. But here it is an increase. Why? Because there is somehow you can see that the balances has gone up, right, in total. Next, you can do the one at the beginning of the year. So you can see the arrow that I put there. So this figure were taken from where? So 105 were taken from here. And the last one is the cash and cash equivalent at the end of the year. So it is directly from the schedule. So now you can start doing your cash flow. So my approach today is that I'm going to go bottom up. I'm going to start using or doing the cash flow from financing activities. Then only I will proceed by going upwards, and then it will stop with a cash flow from operating activities. I will do this last. I will do the simple thing first. So let's look at financing activities as a recap. Financing activities is something to do with your issuance of shares, issuance of debentures, issuance of non-current liabilities, or maybe repayment of non-current liability, anything to do with the movement in the statement of financial position that might give rise to an cash inflow or a cash outflow, right? So basically that. So we're going to do that. Before we can do that, we have step 3. Let's look at step 3. What is step 3? Okay, step 3, I suggest you to classify and color code differently the items that you have in the financial statement, or maybe in your additional information, or maybe in any other information given. Maybe you can use some color to differentiate it. And my suggestion today is that if it's related to operating activities, I'm going to use purple. If it's related to investing activities, I'm going to use investing activities to be blue. And if it's related to the financing activities, I'm going to use this brown. Okay. Sorry. I'm going to use brown. This is the brown, right? So let's just do that. So what we're going to do now is we're going to classify and color code. Okay, to do things simple is that for the first one is that you need to go and find out what are under financing activities. Okay, issuance of shares. Share capital, reserve, and non-current liabilities, they are normally part of the financing activities. So I'm looking at this, including the redeemable preference share. So I will color code that as brown. Okay. And you're going to see if there is any changes here that might give rise to some cash inflow or cash outflow. So we're going to do the same thing when you compare the opening with the closing balance. Okay. Right, so we're going to do that. But we're going to do the classification first. Now we go and classify what are the items under investing activities. Investing activities is related to the movement of non-current assets and other long-term assets like maybe your long-term investment. So non-current asset like property, plant, and equipment, that is depreciated here. Look at the property, plant, and equipment. This is at cost, and this is the accumulated depreciation. Sometimes you are given also a net carrying value or net book value or net carrying amount, but here it is at cost. This is at cost, right? So we color code this as, going to put it as purple. We're going to use purple here. Investment as well. So go and check for other things like investment property, go and check for biological assets or maybe intangible assets that you capitalize in your statement of financial position. Check for that. Any things that are under non-current asset. If you look at the movement, if that is related to cash, that will we have to put it in the cash flow. So after you have done that, now the remaining things that you have there are your operating activities. So sorry, for this one, I'm going to use, as I said, I've made the wrong decision just now, right? So I have to use blue. So that's blue, right? I just take the different blue here. So that's a bit better. So blue there. And the remaining things here, right? I'm going to do this, is going to be purple. Why purple? Operating activities. So this one, all the changes you should calculate and just compare the opening with the closing. And the things that you have here, purple. And just to tell you, dividend is part of financing activities that should be also included under your financing activities, because dividends are normally paid to the orange shareholder as a result of you getting the sources of finance from them as they buy shares from your company. So you reward them with dividend. Okay, after you have done that, let's do your third step. Yeah, we have done the third step. What is our fourth step? This is our fourth step. Step number 4. Step number 4, is I would suggest you to reconstruct the T account where necessary. If the answer is directly given in the additional information, you don't have to do this. But If let's say it is a more complicated situation, it would be easier for you to find out what are the transactions that has cash effect. So start by doing the investing and financing. And in step 5 later, we'll be doing the one for operating. As I say, I'm going to go and do it bottom up. So we're going to look at those transactions that first under your financing activities. Yeah, I'm going to do this first. And then before I do that, I'm going to also do some adjustment for any non-cash transaction that may arise for that financing activities, things like bonus shares, or maybe if there are any revaluation that has taken place during the year that relates to investing activities, those things has to be adjusted because they are non-cash transaction, and also adjust for any non-operating item with the cash effect that may have impacted or give some effects to the cash payment and cash receipt under these two activities. So we're going to go and reconstruct that. All right, before we can do that, you can see that I've already prepared a few things there for you. All right, so let's go to our additional information in case that might give you some better hints. So if you look at the bottom there, we're going to find out what are things related to financing activities. So this is the one related to financing activities because that one is related to redemption of preference shares. Redemption of preference shares is where you repay your preference shareholders, yeah, which is your non-current liabilities. So your preference shareholders are your non-current liabilities. And when you repay them here, you was redeem and you was redeemed out of profits. So when you redeem out of profits, that amount equivalent to the amount being redeemed must be transferred out of profits, right, to the share capital account to replace the amount being redeemed. You have the dividend there, dividend here given to you straight away. This is a very easy part where you are given the dividend, which is one of the items that you are going to include in the cash flow. So you can now start doing the financing activities as I say to you, and this is the first item that you will include, which is dividend paid. And here you are given directly, so you don't have to open up the account for this. You can straight away go and put those item 890,000, yeah, straight away in your cash flow. So you have this one is, so we put it here, I put it here, yeah. You have dividend paid 890,000. In certain question, you may have to work it out, but this question you are given directly. So that was the first item. So we are done with this, right? When you are done with that, we need to put some marking there. I would suggest you to just put a tick to show that you have already done the checking. Same goes here. All right, this one, just put a tick there. Yep, as well as this, whatever that you have investigated or have reviewed, put those ticks, right? Not this one, this one here. Yeah, put a tick to show that you have investigated, right? And it's better that you use a different color. I'm using red because red will normally make us see it even from far, right? Okay, we have done that for dividend. We have done for our short-term investment. Now we're going to settle the financing activities first. So there are many more financing activities here. Yep, I'm going to just look at the financing activities in my next video. Till then, I'll see you when I will see you. Just go on and color code your activities, and we're going to continue with the remaining activities in my next video. Thank you for watching. I'll see you when I will see you. Assalamualaikum and bye-bye.